Thank you very much once again for joining us. We'll be talking to Mr. Ugochukwu Eze, Senior Counsel at Dentons ACAS Law, and we'll be looking into the perspective of the law with respect to the proposed 50% windfall tax on banks' foreign exchange evaluation gains. So let's just go straight to the point. What is, first of all, what's your perspective or your view on the proposal? Generally, let's look at that first before we delve into other issues surrounding it.
Thank you. Thank you for having me this morning. Well, by way of introduction, we know that the tax, the windfall tax, is still a proposal, is still a bill. Before the National Assembly, the President wrote to the National Assembly earlier this month to seek an amendment to the Finance Act 2023. We understand as at 17th July 2024, that bill has passed the second reading. So we believe it is at the committee stage and there will be stakeholder engagement at this point. So what that bill essentially seeks to do, among other things, of course, there will be other provisions of the bill, but of interest to us is the fact that the bill seeks to tax the profits made by banks from the revaluation of Forex in 2023. So the increase in the price of Forex, that the profit they may have made. Yes. The profit they may have made from that, the bill says they should pay 50% of the profit as tax, and that is what is called the windfall tax. Now, windfall taxes are not essentially new in the tax system. It's applicable, or we find it in different countries, right? I think in the UK and even in the US, there have been windfall taxes, especially after COVID, with certain companies as a result of the circumstance made excess profits on their products and services. As a result of that, what the government usually does in circumstances like that is to say, okay, pay a higher percentage of the profit as tax. Now, in this case, the government intends to tax them for 2023 at the rate of 50% of the profit, not of their general profit, but of profits made from Forex trading alone. So that's essentially what it is. Now, sorry?
No, I'm not saying
as to my view on it, I know that while it is still a bill, but it raises a number of questions. Like I said, they are not essentially new, but what I find strange is that in all the economies where we've had such taxes, the government also provides an incentive to say, okay, pay this tax, and then certain reliefs will be given to the companies. I've looked through the bill. I've not seen anything like that here. That's the first. So it might be a burden on the banks. And of course, yes, you would say they made the profit without any effort on their part, per se. It was just the market forces that took up the prices and led to the profit. But then the truth is the profits were made in the year 2023. They have paid their taxes or filed their returns for 2023. Now we are coming in 2024 towards the end of the year, and we are proposing that they should pay 50% of the profits. So there's a bit of a problem. Yes, I know that, or I don't know if that's part of the other questions you intend to ask. But in summary, there are areas in the bill that are not very clear and may raise some problems in terms of enforcement and application going forward in the event that the bill is passed.
Okay, let's look at the principle of fairness. We know, I think Nigeria's tax law encourages fairness and equity. And we might say perhaps the singling out of banks generally as people to pay this particular tax it might be possible that there are businesses in other industries who also benefited from this windfall as a result of the unification of the forex market. Do you think that perhaps the federal government might look into other industries who might have benefited from such a tax going forward?
Definitely. What I think happened in this case is because the money in the hands of banks are somewhat traceable.
Public.
Yes. So the banks are the ones you can say, okay, from their records, they made this amount of money from the windfall. So that's why the government had to pick them in this instance. But I know that windfall taxes are not restricted to any industry at all. And if this bill pushes through and the banks have to pay this, then definitely the government will start looking at other instances or other businesses that would have to pay the same tax. And then it may also create a precedent, because in the long run, what we will have is that any industry at all that as a result of market forces makes what the government deems excess profit, the government can just amend the laws and then require them to pay a higher tax. So it may eventually go round, but for this, at this stage, they are beginning with the banks.
Okay, let's look at, I think we've seen the views of a lot of tax advisory and consulting firms like KPMG and PwC, who said that perhaps might lead to legal disputes going forward because these taxes have already been reported and in most cases already paid. And the rate of tax is above the 30% rate for company income taxes and all of that, which they pay already. That it brings about some form of competition issues and also constitutional crisis. Do you think that banks have a case against the federal government in this?
Well, I would say yes, and I would say it depends. Now, first, like I noted earlier, is the fact that these banks have, most of them, or I want to believe all of them, I believe a good number of them have either paid their taxes for 2023, their company's income tax, that's what I mean here, for 2023, or they have at least filed their returns. And even if they have not filed, as of 2023, when they made that profit, by the Companies Income Tax Act as amended by the several finance acts from 2019 to 2023, with the exception of 2022, they are supposed to pay 30% of their profit to the federal government. Now, that was the basis upon which they traded on in 2023. Now we are coming in 2024, and the bill is saying, of course, when passed, the law will now require them to pay 50% of profit made from foreign exchange. Now, there is a problem with that. And that is where there will be a bit of, there need to be a bit of clarification, either in the act, now a bill, either in the bill or by the FIRS. And this is what I mean. If somebody has paid 30% of the profit of all the profits he has made, would he still be required to pay 50% of the profit from Forex? Or would he be required to pay the balance of 20% of profit made from Forex? That provision is not clear. Secondly, now, there is also the issue of retroactive application of the tax laws. If you look at it, the profits we are talking about were made in 2023, and we are here in 2024. Now, the law is that tax laws do not apply retroactively, except where the statute expressly states that it should apply from an earlier date. So you may recall that I think the Finance Act 2023 was signed sometime June, July, but the law itself, or the act itself says it takes effect from 1st May 2023. I know there was also that instance, I think in 2020, where the Finance Act 2019, although passed and signed in January 2020, had to take effect earlier. Now, there are such instances. Like I said, the law is that except where the statute expressly says it should take effect from an earlier date, you cannot, the FIRS cannot access the banks to pay tax for a previous year when that law was not in existence and that law was not in operation. So it may create a challenge. But then the most important challenge, which for me is even more important than the constitutional issues, the legal issues, is the predictability of our system. A businessman wants to do business in a predictable environment. He wants to know that these are the laws applicable as at the time he's doing business. So he wouldn't want to come into into a system where he makes profits in a certain
change anytime.
Then the next year he's now asked to pay a higher tax. So there is also that aspect of it. And you know that currently the country is already passing through very severe challenges economically, and we need a lot of investors to come in and so on. So this is, for me, a discouragement. There should be certainty, there should be predictability, so that if I come into the market in July 2024, I should say, okay, these are the rules that apply to the business I am doing as of July 2024. And there shouldn't be an issue of, okay, they amend the laws in 2025, and I am now required to do something higher. So I think that's a bigger challenge for me in terms of the economic system in general. And of course, there are the legal issues and so on, like I've explained earlier.
I think, thank you very much. You summarized it perfectly. I think it's the same issues some advisory bodies have said, that it discourages investment because it makes the investment climate kind of uncertain and unpredictable, which is good in the long run. I will appreciate you very much for joining us. For our audience, we're speaking to Mr. Ugochukwu Eze, a senior tax counsel.
Thank you for having me. Thank you very much.
Thank you. Nice.
Have a good day.
Bye.
Thanks all.
Have a good day. Yeah.